Dave, welcome. Good to have you with us.
Thanks very much.
Can the Fed engineer a soft landing?
No.
All right. Thank you very much, Dave Rosenberg. It's been great being with you. Why do you say it's so tricky? Why do you say they can't?
Well, firstly, when you look at the historical record of Fed tightening cycles, we get soft landings 15% of the time and hard landings 85% of the time. So if you're playing the probabilities, why would you make the soft landing your base case? And this Fed is tightening policy, both through interest rates, by the way, and now they're doubling down on quantitative tightening, which is just starting. They're raising interest rates into an inverted yield curve. Every cycle, and I said at the beginning of the year, I said, just watch when the yield curve inverts, the Fed and the consensus economics community are going to find a way to tell you, ignore the yield curve. The last time the Fed tightened policy into back-to-back quarters of negative GDP and an inverted yield curve was the Volcker Fed. And everybody seems to love the fact that last week, Jay Powell compared himself to Paul Volcker and used a lot of the same language that Paul Volcker would have used. Well, Paul Volcker is revered in the financial community. He killed inflation with back-to-back recessions in the early 1980s. So the proof of the pudding is in the eating. The first 2 quarters of this year, the debate, of course, GDI, GDP, the economy is really flat in its back. But the first 2 quarters of the year were dominated by Omicron and by the food and fuel shock, China lockdowns, complicating further global supply chains, the Russian invasion in Ukraine. That was the first installment. Mm-hmm. We haven't seen all the lags kick in from what the Fed has done. That's going to show up towards the end of this year into next year. So the first 2 quarters of this year, and I think if you average out GDI, GDP, we'll just acknowledge the economy is flat in its back. Even if you don't think there's a recession, it's stagnant. But the Fed's actions haven't kicked in yet. And that's going to be the story for the next 12 months. And that's why the recession, if you don't believe it has already started, is staring us in the face.
Yeah, the Fed acts have not kicked in yet. The quantitative easing part of it is the sort of underreported part of it when they're pulling cash out of the system. I wonder why, though, if the economy is flat on its back, why is hiring as healthy as it is?
Well, actually, hiring is not as strong as it seems. For a couple of reasons.
But you had 500,000 jobs the prior month and 300,000 this month, I forget, 315.
I get that, but when you look at the JOLTS numbers, you'll see that hirings have actually been coming down. Really what's supporting the employment picture is that companies are not laying off anybody. Remember that employment month to month is a net number. The hiring rate is actually not that strong. What's happening is that companies are fearful about letting people go and that they won't be able to hire them back. I think the real kicker, and I think what happened is that, bonds sold off and equities rallied in the first little while after today's non-farm number until some sophisticated people look beneath the veneer of the headline. Now, remember, it's an employment report. It's not just one number. And of course, what everybody does is they report the non-farm payroll number. But what nobody seemed to report today, but I think some people caught on, was the kicker was that the work week was down 0.3%. And the work week is a leading indicator for the economy. The work week has actually been flatter down each of the past 6 months. And so when you're down negative 0.3, you see, and you look at that holistically as to what that means for employment, it actually means that the non-farm payroll number was actually negative 150,000 when you counted the fact that people were working fewer hours. Mm-hmm. And when you're looking at the overall economy, it's total labor input that matters. And really, the important thing out of the employment number today, that's why I totally disregard when people say to me today's number was Goldilocks or it was a really good number. No, because you're not looking at the work week. Mm-hmm. And when you count that in, aggregate hours worked, which is total labor input into the economy, was negative 0.1%.